We welcome in our guest for the day, Avinash Gorakshakar, founder and head of research at Avinash Mentor Research Services, joining us. And good morning to the both of you. I'll start by taking the first question, which is from Arvind, who's writing us from Mumbai. Asking about LIC. He says that is it advisable to buy it at the current levels from a long-term perspective? 2+ years is what he's looking at, considering the bonus that was announced yesterday. Avinash, would you recommend that?
I think Mahimak, just for buying the stock for a bonus is not, doesn't make any economic sense, because as it is, I think all of us remember that the stock still trades below the IPO price. So, retail investors who had invested in the IPO are still not making any money here. It's only a matter of some relief for them that now the bonus has come in, so maybe the average cost, gets reduced. But I think there's no need to buy the stock purely for bonus. It's better that the stock goes ex-bonus. Let's see how the numbers perform. And most importantly, what kind of traction they show on the earnings side. Because, that would be a near-term trigger for the stock. As of now, not advisable to buy.
On Bajaj Finance, this is from Balasubramaniam, who's writing us from Bengaluru. He's holding 20 shares of Bajaj Finance that he bought in November 2025 at the levels of 1014. Says he's incurring a loss of around 1720. Wants to know if he can add more at the current level to average out. Says he's a long-term investor. From a long-term perspective, Avinash, would you recommend that?
Yeah, I think, within the NBFC space, Bajaj Finance can be accumulated, but I think keep a time frame of at least a year, year and a half, because I think, the market is definitely now going to reward large NBFCs in a much better way. Interest rates have also stayed neutral, and I think demand seems to be coming back. So obviously FY27 should be a lot better. And I think the outlook also shared by Bajaj Finance has been quite encouraging. So definitely, I think worth accumulating, but keep a time frame of at least 12 to 15 months.
Unimec is the other question that Ramesh from Vijayawada is asking, and viewers, you can also call us, talk to us for your stock related queries as well as of course with our guest. On Unimec, Avinash, Ramesh is holding 70 shares at 893, so he is currently sitting and incurring actually it's recovered in that sense, right, from the lows, but what would be your view? It's the quarterly results haven't been that strong. Should he still continue to hold, Avinash, for the next 5 years is what his question is.
No, I think, defense companies normally display a very lumpy kind of a pattern in terms of quarterly numbers. But I think the tailwind continues to be very strong. And I think, the company operates in a very niche area. So if the investor can hold on for the next at least 2 years, if not 5 years, I think definitely things should improve, because defense is a very large space and I think the opportunity is very large. So, you need to take a very long-term call and can't base your decisions on quarterly numbers. So I would say, yes, continue to hold, but keep the faith at least for the next 2 years.
And is an interesting one, and this is coming in from Muiz Ansari, who's writing us from Mumbai. He says he has one query, and he's asking as to what 2 or 3 stocks that he can buy right now and continue to hold forever. He says he's a retired person and wants to know as to what could these counters be. Avinash, if you were to pick 2 or 3 stocks right now to maybe buy from a really long-term perspective, what would those be?
I think very difficult question, because the markets are so volatile.
Yeah.
But I think my sense is that businesses like steel or cement or infrastructure or hotels will not go out of business. So maybe I think he could look at investing in Indian hotels, or maybe he could think of investing in companies like Mahindra and Mahindra, or maybe even something like a Larsen and Toubro, because these businesses have got a long kind of tailwind. They are operating in sectors which are going to grow along with the economy. So I think, yes, I think if the investor can probably have the time and patience to hold on these stocks eternally, then I think these 2-3 bets in the large cap space could be better. In fact, even IT companies could be looked upon. I think IT is not all that bad, but clearly you need to have a higher risk appetite here. So something like a TCS, Infosys can also be looked upon.
The next question, which is from Sudhir, who's probably been investing in a lot of FMCG counters and interested in a lot of FMCG counters. Today he's asking about Marico. He wants to enter into this counter at the present levels and wants to know if this is the right thing to do. Avinash, would you recommend kind of investing in Marico right now? A lot of these FMCG names are trading below its 5-year averages when it comes to valuation. But at the same time, there is the entire global uncertainty which is putting pressure in terms of raw material prices and eventually their EBITDA margins and volumes as well.
No, I think Mahima, it's better to wait for the quarter four numbers because the bigger negative now for the FMCG companies is that this year the monsoon is not going to be great. The prediction has not been sound, and I think monsoon has got a very significant factor in almost all the FMCG companies. So I think it's better to wait for quarter four numbers and probably wait for maybe a quarter because the monsoon factor is going to play a very important kind of role in most of these FMCG companies. In case the monsoon is not good, I think you're going to see a significant amount of kind of a price decline for almost all the FMCG companies. So it's better to wait and watch.